Re-
Hello, good evening. So we are going to a question on employment income. So this is just a sample question that we're going to do together. Let's see how we can calculate employment income coupled with farming income. Right, so let's go. So I'll read a question which we are going to answer. Right, so that's the question there. All right, so this is let us tax corporate services. So this is our training and coaching business unit. So the course is taxation, and the topic we are looking at is employment income. All right, so that is the question that we have there. So follow me closely as we answer this question. So the question reads, Jaden Kapotwe, who had been employed as a senior manager finance for Kelmac Investments Limited, a Zambian resident company for many years, was declared redundant on 31st August 2022. So his annual salary in the year 2022 was 420,000 kwacha. He had always been provided with airtime vouchers of 750 per month and with free meals at the company's staff canteen. So the cost of these meals to the company was 2,000 kwacha per month. So throughout his employment, Jaden was accommodated in a company house, which had a market value of 650,000 kwacha in the tax year 2022. So had it been let out on a commercial basis, the company would have received monthly rental of 5,500 kwacha, right? So during his period of employment in the tax year 2022, the company paid wages for the workers employed by Jaden at his residence. So this includes the security guard's wage of 1,200 kwacha per month and the housekeeper's wages of 1,000 kwacha per month. Throughout his employment in the tax year 2022, Jaden used his own personal Ford Ranger motor car with a cylinder capacity of 3,000 kwacha, 3,000 cc. For the purpose of the employment, he acquired the car in 2021 at a cost of 160,000 kwacha. So he traveled a total of 20,000 kilometers in the motor car in the tax year 2022. All right, so out of which 4,000 kilometers were in the performance of the duties of his employment, with the remaining 6,000 kilometers being for private purposes. So he incurred motor car running expenses of 3,500 per month in the tax year 2022. The company paid him a commuted fuel allowance of 2,000 kwacha per month throughout his period of employment with the company. All right, so there, in January 2022, the company paid college fees for his children amounting to 15,000 kwacha in May 2022. So the company reimbursed him 8,000 kwacha he incurred on the medical treatment of his sick son. So throughout his employment, his employer had always deducted NAPSA contribution of 5% of his basic salary as employee contribution, and the company had always contributed 5% of basic salary as employer NAPSA contribution on his behalf. So Jaden has always made life insurance payment of 1,500 per month in respect of his children and himself. So on being declared redundant on 31st August 2022, Jaden received the following amounts. So he received accrued leave pay of 35,000 kwacha, repatriation pay of 210,000, then severance pay of 140,000, then there's a pension of 240,000. So half of the pension were employee pension refunds, and the remaining amount half was employer pension refund. So pay as you earn of 93,763 was deducted from his emolument in the tax year 2022. Other incomes. So Jaden has run a farming business for many years. In the tax year 2022, the tax adjusted profit from farming before capital allowances was 367,500 kwacha. It generated from a turnover of 860,000 kwacha. So he had a tax loss brought forward from farming of 95,900, which arose in the previous tax year, when her crop was destroyed by armyworm. So Jaden will not make an election to have farming profits for the tax year 2022 averaged in respect of the loss. He incurred the following expenditure in relation to the farming business during the tax year 2022. So Jaden purchased a new irrigation equipment at 80,000 kwacha, borehole 50,000 kwacha, development expenditure on new banana plantation 36,000 kwacha, construction of a dwelling house for farm managers 127,000 kwacha, construction of new storage buildings for farm produce, which is 28,000 kwacha. Then there was no other implement, plant and machinery qualifying for capital allowances in the tax year 2022. Required. Prepare a computation of the taxable emoluments from employment, clearly stating which of the benefits received by Jaden from his employer is in the tax year 2022 will be exempt from income tax. All right. B, compute the final taxable business profit from farming for the tax year 2022. C is calculate the total final income tax payable by Jaden Kapoto in the tax year 2022. Total max is 20. All right. So let's get to work. Let's get to work and see how we can solution for this problem. Follow me closely as we start. All right. So I hope everyone is able to see our working there. So let's start by looking at how much this gentleman got per annum. So we are told that his annual salary was actually 420,000 kwacha. So we are going to say salary there. All right. So remember, this guy was declared redundant on 31st August 2022. So if you calculate, that is 8 months into the year of 2022. So that 420,000 is going to be prorated to 8 months. So what we are going to do is we've opened the brackets there and say 420,000. All right. Multiply by 8, divide by 12. All right. So there is 420,000 multiplied by 8 over 12. Right. Okay, so we didn't. Okay, so we're going to multiply that. For the sake of moving fast, let's do this. Okay, so that should give me 480,000. All right, 480,000. That will be 480,000 kwacha. So that is the salary that he got for this particular year. All right. So now, what other benefits does Jaden get from his employment? So we are told that Jaden was also getting a voucher. Okay. So this is a airtime voucher of 750 kwacha. So as we know, vouchers are taxable emoluments on the employee receiving that particular benefit. So this voucher is equivalent to 750 kwacha per month. So this guy worked for 8 months. So we're going to say Airtel, or rather airtime voucher. Airtime voucher. So airtime voucher is getting 750, right? 750 multiplied by 8 months. All right. So I'm going to put it there. So 750 multiplied by 8 months. All right, so we have a 6,000 kwacha there. What other benefit did this gentleman receive? So we are told he was also receiving a fuel allowance of 2,000 kwacha per month. Okay, so fuel allowance, remember every allowance is taxable on the employee. Fuel allowance. So this is 2,000 kwacha per month multiplied by the number of months this gentleman worked, which is 8 months. We close. All right, so we say 2,000 kwacha multiplied by 8 months. We are getting 16,000 kwacha there. Okay. All right, what other benefits did this gentleman receive? All right, so okay, I'll call them. Okay. All right. Okay, so we have a fuel allowance of 2,000 kwacha multiplied by 8. Next is, we are told that Kelmac Investments Limited used to pay maintenance allowances. So Jaden would be paid at 1,200 kwacha for the security officer who was manning his residence. So according to taxation of employment income, this is considered as a taxable emolument. So we are going to say security officer, security office security officer allowance. We open it, so that is 1,200 multiplied by 8 months. All right, we close. So what we are doing there is 1,200 multiplied by 8 months. Okay, so the next thing is we are told to say even the house help was also paid by Kelmac Investments Limited, where it was working. So the employer used to pay this particular allowance, so we can say house help. House help. We open the brackets. All right, so that is 1,000 kwacha. 1,000 kwacha multiplied by 8 months. All right, so we are going to get our 8,000 kwacha there. Okay. What other allowances did this gentleman get in this particular farm here? We are told to say the company would actually paid a certain amount towards the school fees of his children in May. Where is that? The amount should be 15,000 kwacha was paid for his children in May. Okay, so this was an allowance that was paid to Jaden for the purpose of paying school fees. So when the employer gives you an allowance, this is a taxable emolument on you as an employee. So we are going to say college fees. College fees. We open the bracket. No, I'm sorry, this was a once-off payment. So this was a once-off payment of 15,000 kwacha. We put it there. What other payment did this gentleman receive from employment? So what he received from employment was accrued leave pay. So according to the tax laws, employment benefits, accrued leave pay is a taxable emolument. Okay, this is a taxable emolument. So accrued leave pay. Accrued leave pay, how much was it? It was 35,000 kwacha. It was 35,000 kwacha. All right, so I think these are the only the benefits that this gentleman received from employment. So what I would do, I will close it there so that we get our total. All right, so our total will be that. All right, we open the brackets. We open the brackets and then we are going to run it to there. Okay, and then we close. All right, so that is 89,000. 89,000. So let me do this. We'll need to delete this formula there. It's not supposed to be there. All right, that formula is supposed to be there. So it's a sum in the brackets. Then we run it to there. We say enter there. Okay, and then here we are going to say equals that plus that. All right. So we have our 369,600 kwacha. This is the total benefits that this particular person received. Okay. Okay. So now here we are going to say less allowable expenses. So remember, there are certain expenses that are allowed. So when we say allowable expenses, meaning tax should not be charged on these particular expenses. So these are the ones that we are going to look at. Okay, so we are told in the question to say, Jaden was using his Ford Ranger vehicle. This is his personal Ford Ranger vehicle, which he bought in 2021. All right, at the cost of 160,000 kwacha. So since he would use this personal order vehicle to do his employment duties, all right, so he qualifies for what is called a capital allowance on this particular asset. So a capital allowance is a tax relief that is given on capital expenditure, all right? So for a Ford Ranger, the capital allowance that is there is 20% because this is a non-commercial vehicle. Okay, so this is a non-commercial vehicle, so 20% applies as capital allowance. All right. Okay, so let's calculate that. So we are going to say less capital allowance. Capital allowance. So we have 160,000 multiplied by 25%, sorry, rather 20%. 20%. Okay. I'll close the brackets. Now, there's something that we need to note here. Remember, there's private use here as well as business use. So we need to remove the private use because a private use is not allowable. Okay, it is not an allowable expense. The only allowable expense is the business use of this particular vehicle. So we are told that in the charge here, he drove a total of 20,000 kilometers. Okay, he drove a total of 20,000 kilometers, of which 14,000 kilometers were for business use. So we are going to apportion and allocate it to business use only. So there we are saying, 14,000 kwacha divided by 20,000. Okay, so the 14,000, this is the mileage relating to business, and 20,000 is the total mileage. So we have apportioned that. All right. So when we apportion that, we are going to get I think it should be 14,000 divided by 20. That is 70%. So 70% of the usage of this vehicle was actually for business use multiplied by the total cost, which is 160. So we are getting 120 then multiplied by 20%. So that is 22,400. So 22,400 is the allowable expense. on this particular, this is the capital allowance allowable, all right? Then we are going to look at the motor car expenses. Motor car expenses, again, here we need to be very careful. So motor car expenses are allowable if they are used for the purpose of doing business, all right? So private use, again, is not considered, or it is not deductible. So the only apportionment that we are going to deduct here is the business use, okay? So again, we are told to say it's 14,000 kilometers which were used for business purposes, and the 6,000 was actually private usage. So the Director General ZRI only allows us to apportion business use only, okay? So that's the only amount that we are going to deduct. So there we are going to say motor car running expenses. Motor car running expenses, okay? Okay, motor car running expenses. So the motor car running expenses, again, we are told is how much. All right, so in the question, it is he incurred motor car running expenses of 3,500 per month in the tax year 2022. Okay, so per month, 3,000 kwacha, 3,500. This was per month, so we are saying multiplied by 8 months. All right, okay, multiplied by 8 months. And then that has to be apportioned by the business use, which is 14,000 divided by 20,000. All right, so I did a calculation earlier on. So that 14 divided by 20 is basically 70%. So we are saying 350 or 35 multiplied by 8. So we are saying the total car running expenses for 8 months was 28,000 kwacha multiplied by 70%. All right, so 19,600 is what we are going to deduct here. 19,600 will be deductible. All right. The next thing is, I know there's a part to do with NAPSA contribution. So this question doesn't require me to calculate the take-home income of this particular person. What we are just actually doing is calculating the taxable emoluments for the charge year 2022. So I'm going to ignore a NAPSA contribution for now unless if the question required me to calculate the take-home income of this particular person, okay? So let's add this. Let's add these two. All right, so we are going to add these two. That's 22 plus. All right, then we say enter. Great stuff. All right, so now after that, then there I'm going to use this formula. So 396 minus 42,000 there. All right, so 327,600 kwacha is the total taxable emoluments. So this is the total taxable emoluments from employment. All right, let's just leave it at emoluments. All right, so these are total taxable emoluments. All right, so I'll even close it like that. So that is the amount we were actually looking for. All right, so that is what is giving us how many marks? That is what is giving us, okay, so it says 10 marks, but I think that would give us about 6 marks because there's a statistical component that we need to deal with now. All right, so this second component now we're dealing with is, the question tells us to say, also determine what income is exempt from tax. So basically here, we are not going to do any computation. So that is B, so that is still A. So we can maybe just say this is A2, right? We can just say this is A2. All right. Okay, so this is A2. So A2, I'm going to just list the incomes that are exempt from tax. So the first one, the first income that is exempt from tax here is repatriation. Okay, so repatriation. So repatriation is not a taxable emolument. So these are treated as refunds, okay? These are treated as refunds for the tax year 2022. So when you look at the PPP Zika manual, it will guide you accordingly. So repatriation pay is one of those that will be exempt from tax. Repatriation pay, okay? The second one is free residential. Free residential or free residential accommodation. All right. Accommodation. Okay. So free residential accommodation is not a taxable emolument on an employee. So if your employer provides you with a free residential accommodation, that is not taxed on an employee. Rather, the costs or it is that is taxed on the employer. Okay, so and ZRA is going to take into account the market value of that particular asset. At what is the commercial value the company would have derived from that particular property should they decide to rent it out. So that's where ZRA is going to base that decision. But it is not a taxable emolument on the employees, okay? So that is why we are moving it there from there. To reimbursement. We've seen that there was a reimbursement that was done. So let me just go back to the question, just somewhere up there. Okay, where? All right, so the company reimbursed him 8,000 kwacha incurred on the medical treatment of his sick son. So remember, medical treatment is not a taxable emolument on the employee, okay? It is not a taxable emolument on the employee. So what happened here is Jaden incurred this particular cost. So he paid for these medical fees, okay, and then went back to the employer and claimed those fees that he paid. So the employer paid him back 8,000 kwacha. So that is not considered as income. It is not a taxable income. That's why we are reimbursing it, okay? So that is not considered as a taxable emolument. Okay, so we say reimbursement. Reimbursement of medical expenses. We can put it like that. All right. The other one is sovereign's pay. Sovereign's pay is also not taxable. This is considered as a refund, sovereign's pay. All right. The other one is pension refund. The pension refund is not a taxable income, at least for the charge year 2022. It is not a taxable income. What other income can we look from the question there? So there we are looking at free meals from a canteen. Okay, so free meals are not taxable on the employee. But if the employer gives an employee an allowance, then that will be taxable. All right, this is not taxable on the employee from the staff canteen. Okay, great stuff. So that will give us 10 marks. That will give us 10 marks. So now let's go to B. Let's go to B and let's work out B now. So for B there, okay, undo. Okay, undo. All right. Okay, so let's now do B there. So we can say B What is the second requirement? So the second requirement is for us to compute the final taxable business profit from farming for the tax year 2022. So Jaden was also engaged into farming. So let's also see what we can do from there. Right. Okay. All right, so let's do this. So what was the taxable profit from farming? We should have been given the taxable profit from farming as 367,500 before capital allowances. So we can say taxable profit before capital allowances, taxable profits before capital allowances. All right, so taxable profit before capital allowances. So we are told it is 367,500 kwacha. Oh, great stuff. Okay. Great stuff. Great stuff. Great stuff. Okay, so now what we need to do now, we're told this is before capital allowances. So we are going to remove capital allowances. I explained what capital allowances are when we're dealing with Jaden, the taxable emoluments there. So capital allowances are basically, if you have done financial accounting, you must be privy to the term depreciation. So depreciation in accounting is just, it's an accounting measure that is used. It's used to depreciate or to discount the cost of an asset. So when you could purchase an asset for 50,000 and you've used this for a year, accountants consider that that asset would have suffered wear and tear in that particular year, right? So when you're accounting for the following year, you must actually account or remove that component of wear and tear, and that was what is referred to as depreciation. Okay, so the rate is for depreciation differs from company to company depending on your accounting policies. But when it comes to taxes, this is the same component that is applicable. So this is called a capital allowance or a wear and tear allowance. All right. So this is what we are talking about here. Capital allowances. So this is a farming business, and farming is very good, especially for tax purposes, because we've got a very good number of capital allowances there. So this is one way of avoiding tax. Actually, this is what is called tax avoidance, where you avoid tax through the provisions of the law, rather than running away from the law and posting false numbers so that you reduce the taxable profit. So this is one way of actually reducing your tax liability. All right, so what are some of the expenditures that this gentleman did? So we are told to say he purchased a new irrigation equipment. All right, so an irrigation equipment, it falls under property, plant, and equipment, or it's a farm implement. Okay, all farm implements qualify for a capital allowance of 100%. So if your cost is 100,000, you are going to claim the whole cost. So it is going to reduce your tax liability by 100%. So that is one there. So irrigation equipment, irrigation equipment. Okay, so irrigation equipment there, the cost was 80,000 kwacha multiplied by 100%. So we are recovering this 100%. So I'll put there, that's 80,000 kwacha. What is the other thing that was purchased here? So there is a borehole. Okay, so a borehole also qualifies for 100%. These are farm work, so it qualifies for a capital allowance of 100%. Okay, so borehole. So when you drill a borehole at your farm, you are actually reducing your tax liability by the actual expenditure incurred. All right. So the actual expenditure on this was 50,000. 50,000 multiplied by 100%. Multiplied by 100%. So that gives us a 50,000. Great stuff. All right. So the other one is we've got development expenditure on the new banana plantation. Okay, so when you do a development expenditure, so this relates to you can do a banana plantation, for example, you can do a tea plantation, coffee plantation. These qualify for a wear and tear allowance of 10%. So this is a development. This is a development allowance, 10%. So you are going to claim 10%, and this will reduce your tax liability by that same percentage. Okay. Right. So we are saying development. Okay, I'll say banana plantation. Plantation. All right. So open brackets there. So banana plantation there was, the cost was 36,000 kwacha. 36,000 kwacha multiplied by 10%. All right, so 10% there. I want to assume this should be 3,600 kwacha. All right, the other capital expenditure incurred was the construction of a dwelling house for farm manager. All right, the construction of the dwelling house for farm manager. So dwelling houses basically qualifies for a capital allowance of 100,000. So now this is on an exception. So the Commissioner General ZRA requires that if I, Kelvin, who is a farmer, claims this dwelling house cost, if this house is basically for me, it would qualify as such. But this is a farm that is used by a farm manager, an employee of the farm. Okay, so since it is used by an employee of the farm, it is restricted. It is restricted to 20,000 kwacha in the tax year 2022. Okay, so this is restricted to 20,000 in the tax year 2022. All right, so we are only going to claim 20,000 and not the 127,000 kwacha. All right, so we are going to say dwelling house for farm manager, dwelling house. So here I'll write say restricted to 20,000 there. Okay, great stuff. Okay, so the other one was the construction of a new storage building for the farm produce. So construction of a new storage building for a farm produce. So when you do, these are called farm work. So when you do a building or you do some fencing to your farm, you actually claim capital allowance at the cost that you incurred. So here we are saying this is a what? This is a farm storage building, storage building. I'll open the brackets there. So the cost was 28,000 kwacha. I'll do multiply by 100%. So we are claiming 100% of this. All right. So 100% is 28,000 kwacha. All right. So for the purpose of farming, there was no other expenditure that was incurred by Jaden. So we are told to say there's no other capital expenditure qualifying for capital allowances for the tax year 2022. So what we are going to do now is we're going to aggregate all these, or rather add them. So I'll do the sum there. Then I'll drag this up to there and close like that. And then we say that all great stuff. So that 181,600 kwacha. So you've seen how this has reduced our tax liability. All right. So what then I'll do there is this minus that. So I'm using minus there so that we reduce our tax liability. All right. Now, there's a very important component there. So we are told that Jaden, he had a tax loss brought forward from farming of 95,900, which arose in the previous tax year when his crop was destroyed by armyworms. Jaden will not make an election to have farming profits for the tax year average in respect of the loss. So he doesn't want to have this average in respect of the loss. Okay. So what we are going to do is, since this, the rule is that when you make a loss in a certain financial, or rather a tax year, when you make a loss, okay, you are actually going to carry forward this loss for the next, is it 4 years? Yes. So it is going to be charged against the profits of the coming years, all right, for a period of 4 years. So here we are going to get we are going to say taxable profit before loss relief. This is the one here. So this is a taxable profits before loss relief. Okay, and then we are going to say less. We're going to say less previous year loss. Okay, so what was the previous year loss? Is 95,900. Okay, so this is going to be less. We are going to subtract. We're going to subtract. So we are going to say it's this minus that. Okay, all right, sorry. Okay, so we are now talking of a 90,000 kwacha farming profit. So this is the taxable amount. This is the taxable amount from farming, all right? Taxable farming income. This is what we are going to tax. All right, thank you. So now let's do the last part. So the last part now has to do with the total tax paid by Jaden for the charge year 2022. Calculate the total final income tax payable by Jaden Kapotende tax year 2022. All right, so we are going to name this as C and say, I'm going to change that later. So let me change it, computation of taxable farming income. Let me change that, not emolument, taxable farming income for the charge year 2022. So here now we are saying this is the total. Control C, so I'll put it there. No, let me bring it there. Okay, great stuff. Okay, so let me just highlight that in bold letters so that we are able to follow. All right. All right, so let's now do the final computation of the total income tax payable. Computation of the total income tax payable by this gentleman called Jaden. All right, so We are going to calculate it in this way. So I like calculating this in this way. So we have a total there. So let's have a total there. All right. So we're going to have a total there. And then I'm going to have non-farming income there. Non-farming income. All right. And then I'm also going to have farming income. I'm going to have farming income there. Okay, let me put it in this one. Farming income. All right, I like to put it like that. So I'll just remove this from there and then move it there. I'll say total there. All right, so total. Okay, so I'll put these things in bold letters so that we can follow. Great stuff. All right, so I'll do this so that we look a bit professional in the way we arrange things. As accountants, we arrange things in a certain order. Okay. So the total there. So total income, we have 327 for 600. 327 600 from employment, and then we also have 90,000 kwacha. This is coming from farming. So non-farming, I'm going to put 327 600, and then farming income there. I'm going. So there's nothing there. So I'll put a 0 there. Okay, and then I'll put a 0 there, and then I'm going to put 90 at the end there. Okay. And then I'll add this. I'm going to average this. I'm going to add this. I'll add this. Okay. So I'll say employment. I'll just put those things there. Employment. No. Let me use emoluments. Emoluments. Okay. And then business profits. Profits. Okay, great stuff. We're following. So I will just add those two. We add those, so we get that one. So there, I'm just going to get that, and then I also get that, and all right. So that's what we are having there. When we get there now, we have to say less. So the tax-free income, for the charge year 2022 is 54,000 kwacha per annum. All right, less tax-free income. So we have 54,000 there. All right, so we have 54,000 there. Yeah, so that's the one I'll put even there. Okay. All right, so there, I'm not going to put the 54,000. Get me right on this one. I've already deducted. This is one person receiving both income and business, okay? So since we're aggregating the two incomes together, we're only going to deduct 54,000 once. But in an instance where Jaden is not in employment, but is in farming business, the same thing will apply. We are going to deduct 54,000. But since we are aggregating two incomes, you are not going to deduct 108. Okay, the law doesn't stipulate it that way. So that's why I'm just deducting 54,000 from the non-farming income. And then we're not going to consider it on the other side. All right. Okay. I hope you have followed there. What we are doing. I'm not adding, I'm deducting there. That's why I've put less. So as accountants, we use the word less. So get used to that term. All right. All right, so with that minus that, enter, and then there I'll just drag the same there to be at that particular level. So here I'll even close this one, and I'll close this. Okay, and also close this one. So this is the taxable. This is the final taxable income for this man, Mr. Jaden. This is the total taxable income, total taxable income. Sorry. Just total taxable income. All right, so I'll even put this in bold as well. All right, so we're almost done the question. The only thing remaining now is to calculate the tax payable. So we are going to say income tax. Income tax on non-farming income is that. So income tax on non-farming income, we're going to do this. We are saying the next 9,600 will be taxed at 25%. Okay. Then the next 25,200 will be taxed at 30%. Okay. And then the balance will be taxed at 37.5%. 0.5%. All right, 37.5%. Okay, so now let's go. This is we are going to put it there, so it's 2,400. I know you can do your computation there. So 25,200 multiplied by 30%, 7,560. All right. Okay, enter. Then, so now what we are going to do to calculate the last band there, we are going to say 273,600, okay, minus 96 minus 25,200. So we get a balance of so the balance we are getting there, colleagues, is 238,800. So this is what we are going to multiply at 37.5. So we say 37.5%. So this is going to give us 89,550. Okay, 89,550 is what we are going to get there. Okay, so that is from okay, let me do this undo. Okay, so now I'm now going to put farming income there. Farming income. So every farming income for the charge year 2022 is taxed at 10%. So this will be 90,000 multiplied by 10%. Whether you are a corporate entity, an individual, you will pay this at 10%, at least for this charge year. So we are going now to add these figures there. So this is the total tax that we are going to pay. So what I'll do is I'll say sum, open brackets there, and then I'll drag this all the way to that, and then just close it and say enter. So we have 108,510. as taxable income. Now, there's one thing that we need to consider here. We are told that Jaden had paid 93,763 kwacha in the charge year 2022. So if we pay this amount to ZRA, that would be called double taxation. We would have taxed Jaden twice, all right, because he has already made a payment towards pay as you earn to ZRA. We want to assume maybe this is a provision that Jaden made and made this payment to ZRA. So since the payment that he made to ZRA is less than the actual payment that he has incurred, the actual profit was way more than what he projected, and the tax is way more than what he paid. So what we are going to do is we are going to remove the amount that has already been paid, and then the excess is what we are going to remit to ZRA. Okay, so pay paid in this particular year was pay as you earn paid. Pay as you earn paid. We are going to put pay paid, already paid. Okay, so he paid a total amount of 93,763. Okay, so he paid this amount. So what we are going to do now is to say that minus this, enter. So for the charge year 2022, Jaden is going to pay a total amount of 14,747 kwacha to ZRA. So this is the computation. Total income tax paid. Total income tax payable, not paid, payable. All right. So the total income tax payable is that one there. These things are easy, colleagues. We just need to know the rules. So once you know the rules, then you'll find these things very easy. Okay, you'll find these things easy. You find these things very easy. I think we are done. We are done. We can just format these so that we look professional as we present these figures. Okay. We want to look professional as we present these figures. Because we are accountants, eh? Okay, we are accountants, so we must produce these figures with professionalism. It's on which. All right, thank you very much. I think this is all we have to do. So if you are doing taxation and you need a tutor to run you through the whole course, please search for us on Facebook. This is Virtuous Tax Corporate Services. So you can just search for us on Facebook. All right, or you can call me. You can call me on 0965105486, and then we can make a plan. You can make a plan, or send an email to the following email address. I'll write my email address here, so that if you want, you can just send an email to Virtuous Tax at gmail.com. Okay, or you can also email Kelmac Group CEO at gmail.com. So whichever email address you use, you are going to get through to me. All right, I can also write my phone number that you can actually use for for these things. So our number, our cell phone number, you can use this number on WhatsApp, or can you give me a direct call? So on WhatsApp, the number is 0. The number is 0770 12 7790. So this number is both available on direct call and on WhatsApp. So let's get started and let's learn taxation. Thank you very much and have a very good evening.